Hey everyone, welcome back to the channel, your number one source for income-oriented investing. And today on March 5th, Harvest has finally released a bunch of new single stock covered call ETFs, including the leverage version of the strategy prior MicroStrategy and Coinbase. So if you scroll down, you'll see them here, everyone. They all started with a price of $12 like the other ones. So you see AMD here is out, Broadcom, Coinbase, the enhanced or the leveraged Coinbase, Costco, Alphabet, aka Google, the leveraged MicroStrategy finally out, everyone, MSTE, and also Netflix. Also, the first distribution has been announced, or the estimated. I'm assuming they're going to stick to it. If I know Harvest, they're very consistent in their messaging. When they say the first distribution is going to be something, they usually stick to it. So you actually see here that they actually did it on purpose to start everything at $12. If you start everything at $12, well, this basically, if it's 20 cents, it's 20% yield based on a $12 price, right? So all the yields, the potential yields, make 100% sense to me, because obviously the more volatile a stock is, the more covered call premium you get, the higher the yield is. So AMD, and these are the enhanced ones. Remember, there's 25% leverage here as well. So AMD, you're looking at 20% yield, right? Based on a $12 stock price. So everything I'm about to say is based on a $12 stock price. Maybe they're a little bit higher now or a little bit lower. Remember, they were just released. And by tomorrow, you should see what the net asset value is versus the actual market close. So this is really cool because Harvest has been updating them pretty much every day, which is awesome. But of course, these are ETFs, they're not split share funds, which means the net asset value and the market price are going to be very, very, very close typically. So yeah, AMD 20% yield, not really a surprise. AMD is a fairly volatile stock, maybe a bit less than the Nvidia one, but about the same range, right? You see the Nvidia one is about 22, so 22% yield. So Broadcom, I think it's a little bit less volatile, a little bit more boring. So obviously you have less yield. You're going to have 15% yield with this one. The enhanced Coinbase obviously should be a lot higher because Coinbase is a pretty volatile stock. So you're looking at a 40% yield. And of course, based on the $12 stock price, right now I believe it's a little bit higher. So it's going to be lower than 40% yield based on that. Costco, I'm not surprised to see the lowest yield out of all of them. Costco is a very, very boring, low volatile stock. So obviously, even with 25% leverage, they're cranking out 10% yield here. Google, also fairly boring stock, not as volatile, kind of in maybe just a little bit less volatility than Amazon, I believe. So a little bit less volatile than Amazon. So 12% yield. And of course, MicroStrategy, the most volatile stock of them all. And I don't know if you guys have been following MSTE MicroStrategy. It's been zigzagging all over the place. Sometimes it's down heavily, then up heavily, all in the same day. It's been absolutely crazy. And remember, of course, high volatility. This is what high volatility is. Big price movements, right? So obviously you're going to have the highest yield here. Based on $12, it's 60% yield, which makes sense in my opinion. Why do I say it makes sense? Well, remember the strategy, guys. Remember the strategy. Harvest is writing covered calls on up to maximum 50% of the portfolio, right? And I'm guessing here that they're probably even about 33 to 35% on MicroStrategy, maybe even less. So they're writing max on half of the portfolio. The other half is not covered. There's no covered calls. Plus, there's 25% leverage. So with MSTE, if we compare it to MSTE, which has no leverage, but writes covered calls on 100% of the portfolio, and the current yield is about 120. Obviously, if you're writing on 50% of the portfolio, you'll get about half the yield. So this is why the 60% yield makes complete sense if you're comparing it to MSTE. right? Because they're covering 100 here. Here they're covering up to 50, but there's 25% leverage. This is why I think that they're not even at 50. They're probably at 33, 35. You add the 25% and you're there. And by the way, MicroStrategy, while I'm filming this today, this could change in an hour, guys. It's up very, very strongly here. It's up 8%. Now it's going back down. It's just insane. It's just absolutely insane. Remember, it pretty much does kind of follow what Bitcoin does. You see how, well, Bitcoin's went to 90,000 like 5 minutes ago. Now it's going back down, and so is MicroStrategy. So it really is correlated to Bitcoin. Sometimes not always perfectly, but this is definitely going to be the funnest stock in my portfolio. So anyway, just to finish off, you got Netflix as well at 14% yield. So Netflix doing really, really well, but not a super volatile stock like Coinbase or Palantir. So 14% makes sense to me. So these yields all make complete sense. This is Harvest we're talking about, guys. So they never pay more than what they bring in. They're very, very responsible. And you got to expect varying monthly distributions. Maybe not a lot. It really depends on the stock and what happens, the volatility. But it is possible that there's fluctuations with these monthly distributions because remember, it's based on covered call premium, which is based on volatility, right? So they could vary. Also the NAV as well, because if a stock takes a 25% hit, well then there's less to write covered calls on. So that could be a factor as well. So I'm just telling you this because I wouldn't take increases or decreases too negatively or positively. It's just based on the volatility. Okay, that's all it is, guys. So last comment I want to share is, well, anyway, if we just stick with the MSTE, if you have the question, yes, I do intend to swap my MSTY to MSTE, including in my Lira, because compared to the YieldMax, this has 40.4 management fee, whereas MSTY has 99 management fee. So the management fee is much less. It's actually less than half, and also it has leverage as well. And you guys know that my favorite format of a fund is covered calls and 25% leverage. So yes, I'm going to be swapping my Harvest MSTY to MSTE. I don't know when, but probably in the next couple of days or weeks. And I'm also going to be swapping my YieldMax MSTY in my Lira to MSTE. This is going to take a lot longer because I have to do Norbert's Gambit to do the currency conversion, but I'll let you guys know. I'll do a post when it's done, a members only post. So if you're interested in knowing when I do it, please become a member. Click on that join button, figure out what it's all about. But so that's it, everyone. They're out today. And in terms of HHIS, the all-in-one, I did get confirmation from Michael Kovacs that right away, the new ones, I don't know if it's going to be today or tomorrow, but I'm assuming it's going to be done rather very, very quickly overnight. I'm not sure. All the new ones, so AMD, Broadcom, Costco, Google, and Netflix are all going to be added in HHIS. So basically, HHIS is going to get a little bit more boring as of tomorrow or this week, whenever they do it, because instead of having these 9 stocks, it's going to have 14 stocks, right? And a lot of them, like the Costco and the Google, they're a lot less volatile. So, but another thing is that they're going to be swapping out the non-leveraged Coinbase and MicroStrategy for the leveraged one. So obviously that's going to raise the yield, right? Swapping out the non-leveraged Coinbase and MicroStrategy for the leveraged one. But then adding Broadcom and Costco, Netflix, and AMD, which all have yields less than 25%, is obviously going to drop the yield. So I think, I don't know what the next distributions are going to be for HHIS, but I wouldn't be surprised if it stays the same or maybe drops a little bit. Obviously, normal, guys, when they add the new ETFs, which have less yield than the average of these ones, right? So by tomorrow, I expect the website to be updated, or in the next couple of days, and you'll probably see all 14 stocks in here. So HHIS is actually getting much lower risk, getting less volatile in my opinion, because it's going from 9 stocks to 14, and a lot of the new ones that are going to be added in, like Broadcom, Netflix, they just have a little bit more lower volatility. So HHIS, which is one of my core positions, the way I see it, everyone, it's a concentrated version of the NASDAQ. That's how I see it. All these stocks are on the NASDAQ, and all the new, except Eli Lilly is technically on the S&P 500. But all the other ones, including Costco, Netflix, AMD, Broadcom, they're all on the NASDAQ. So I look at HHIS as pretty much a concentrated version of the NASDAQ. So if you guys can't stomach the volatility of the single ones, you could just get the basket, right? Just get the all-in-one. Obviously, very, very popular. Already at 140 million AUM here. I think that's just going to keep growing and growing and growing. My prediction is that HHIS might eventually be Harvest's #1 fund after HHL. I think eventually it could beat HHL. HHL's at 1.6 billion or something. It's going to take a while, but I definitely think it's a great, great idea. So that's it. Just wanted to share the announcement and go through it with you guys, and talk about the yields and HHIS. So thanks for watching. Give a thumbs up. I would really appreciate it, and see you next time.